Analysis on the performance of the Australian market. We are joined, of course, by Julia Lee from Bell Direct, and you too can join in the conversation with a question or comment on Twitter. Just use hashtag MKTDAY or email us at yourmoney@skynews.com.au and we'll do our very best to answer it for you. First, though, of course, Julia Lee from Bell Direct joining us now. Julia, I'm quite interested in this, or at least your opinion of this pullback we did see, because all relief rally in the last few days, plus that rally that we saw on offshore markets overnight on the back of these hopes that we will see some form of stimulus emerge tonight post FOMC meeting. But it seemed that broader concern, those macro concerns, and of course the failure, still no news of that coalition being formed in Greece, just seeing investors start to retreat slightly in the afternoon.
Maura, finally a busy day on the markets. We saw $4.5 billion worth of stock being traded, so it was good to see some activity on the market today. And I guess most risk assets in the last 24 hours really just trying to front run that FOMC meeting or the results of that Federal Reserve meeting. And of course the market hoping to hear those magic words, quantitative easing tonight. So we have seen risk assets doing fairly well, with the exception of a couple. And if we have a look at the Australian market today, really pulling back on those strong gains that we saw in the morning, in the end only up by 0.2%. And of course, if we do see quantitative easing in the US, one of the impacts will be a weaker US dollar, and usually that means a stronger Australian dollar, and that's been a key headwind for the Australian market when we've seen QE1 and QE2, and we've seen the Australian share market significantly underperforming the US as well as commodity prices. So some concerns around that Aussie dollar, which hit a 6-week high overnight at 102 US cents. And if we have a look at gold, we've seen some strange movements there as well. We've seen gold, usually a beneficiary of quantitative easing, but overnight we saw gold prices losing 0.5%. In Asia today, though, gaining about 0.2%, although we did see our gold miners coming under pressure today. Newcrest Mining are trading lower. Instead, all the activity were around those media stocks on the Aussie market. The big winner today was Consolidated Media after News Corporation came out with a bid at $3.50. So we did see Consolidated Media shares soaring today on market, up by a massive 9.7%. We also saw other media companies benefiting. So we did see Southern Cross Media up by 4.7%, and Seven Holdings also up by about 3.5% today. So a busy day on the market. The market now looking towards that FOMC meeting, but certainly that activity in the media space helping the Aussie share market in terms of volumes.
Yeah, indeed. And of course, Julia, we did see Cons Media shares end the session up very close to 10% higher, 9.75% in positive territory there, and News Corp shares closing 0.5% higher. So all in all, a pretty good at least outcome, I suppose, for shareholders at this point. Still a lot of regulatory hurdles facing this potential deal, though.
If we have a look at that takeover bid at that $3.50 mark, in terms of how Consolidated Media shares have performed over the past year, this is what it looks like at the moment. You can see the shares just under that $3.40 mark. So a pretty big jump in terms of the shares, but of course the shares have been rising on speculation that we could see either Telstra or News Corporation making a takeover bid for the company. Looks like News Corporation has been the one to step up to the plate to make this takeover bid at $3.50. It does look like, I guess, a small price in terms of getting control of the company. It's only a 14% premium to the last traded price. A lot of analysts were hoping for a bigger price if we did see a full takeover of the company. But the final result, if it is successful, will mean that News Corporation will own 50% of Foxtel, which of course is an important strategic asset, and 100% of Fox Sports. So altogether, a pretty exciting announcement coming through from News Corporation. And if we have a look at this area for news, if we have a look at where news derives most of its earnings from all around the world, it's from its cable business. And it's only here in Australia that newspapers are so dominant. So it does look like a very strong and a big shift in strategy away from their newspaper mastheads into the digital age, and altogether great news for media stocks.
Still joining us on the line there, Julia, lots of M&A on the Aussie market, it seems, today, and just generally, do you think that this will continue? What's the environment out there like there for corporate activity right now?
It actually makes sense that there's a lot of M&A activity on the Australian market at the moment, and that's because we are seeing valuations on stocks in Australia at the lowest point in 2012 so far. At the same time, the balance sheets, corporate corporate balance sheets are in much better shape than they have been in many years. So not surprising that we have seen a spate of M&A activity on the Aussie share market today and this week. If we have a look at what's happened this week, we've seen Little World Beverages, which of course owns Little Creatures Beers, receiving a takeover offer from Kieran. We've also seen now Consolidated Media with that takeover offer from News Corporation. We've also seen Genting as well as Crown interested in Echo Entertainment. Of course, last week some of the best performers on the market were those stocks which were under takeover speculation, stocks like Perpetual, stocks like Qantas and stocks like David Jones as well. And I guess part of that are the low valuations. If we have a look at some of the lowest valuations on the market in terms of price to book value, these are some stocks like Fairfax, Hutchison as well as Qantas and Billabong, and no doubt these are the companies which are under takeover speculation. So a combination of very low valuations in terms of the Australian share market, a lot of sectors, especially retail and media, being at cyclical lows, as well as healthy corporate balance sheets, is resulting in this M&A activity, and that's set to continue.